Risk management, it is one of the most underrated trading skills, but in order to become a professional trader, a full-time trader, you need to master this skill. This is the difference between success and failure in trading, between long-term profitability and consistency or not. The first thing that you need to understand about risk management, it is the objective. And the objective of risk management, it is capital protection, capital preservation. So in order to make money with trading, you need money. So you need money to make more money. The more you lose, the harder it will be to recover. Okay? So preserve the capital. It is one of the base, one of the foundations of success in trading. Do not ignore that. Money makes more money. You can see in the example, same absolute returns, but with different absolute outcomes. And the reason, it is the initial balance. So keep that in mind. How much money you have, it is extremely important to make enough money to live from trading. Same effort, different absolute returns. Remember that. Money makes more money. In the next example, do not think about the initial balance, but in a situation that you are facing a drawdown, okay, after a few losses. So the bigger the drawdown, the more effort to recover the money. If you're starting with $1,000 and you lost 50%, you need to make 100% in profits to recover, to get back to the initial balance, to break even. If you lose 50%, you will need to make 100% to get back to the initial balance. The next topic, it is extremely important and almost no one talks about. The number one risk factor in trading, it is the trader itself. Every decision and action goes through the trader. So if you lose your mind or if you're trading emotionally, you can even blow your trading account in one single day. When you look at the trader as a risk factor, it changes your mind and how you consider the possibilities. Human errors, emotional trading, getting out of the trading plan, every single possibility should be considered and how it will impact your trading capital. And the most important, what you're gonna do to prevent it from happening. Start small. Never rush. Trading is already extremely risky. Be conservative. If you rush trying to make money, it is almost certain that you're gonna lose it. In videos like this, most of the traders are not profitable and they are just trying to learn. And when you talk about risk, rushing it is a huge risk. And the reason of that, the first reason of that, it is the money itself. At some point in your trading career, in your trading development, you will need to use real money. But the more money you spend to learn how to trade, the more effort you need to recover the money. Okay? If you look again to the drawdown correlation and the effort to recover the money, but now applying that logic to your overall money, not only the money in your trading account, and thinking about, do I really need to risk that percentage of my finances to learn how to trade? Think about the effort that you need in the future if you become profitable. Okay, so spend the minimum possible to learn how to trade. But the real risk of rushing is not learning how to trade even after years, getting stuck in a cycle of confusion caused by losses and emotional damage. And this is extremely dangerous. Not only in your trading development, but that emotional damage caused by trading can affect your daily life, can affect your relationships, your finances, and even make you addicted to trading. So do not overexpose yourself. Control the risks. I would say that again. Control the risk. Do not put yourself in a bad situation. Okay? Especially if you're completely beginner or young. Be cautious about trading. Do not deposit money thinking that you make profits. It takes years to become the trader that bring results. So keep that in mind. Don't forget to like and subscribe, and the most important, trust God and rely on Him.